Good morning and welcome to Equity Story. Today is the 29th of March and it's a Wednesday, which is the middle of the week, which means I'm here with Claude. We're going to talk about thought of the week. And I left it a little bit open today, Claude, because I want to talk about lithium. So I wasn't sure how you're going to go with that if I do that. So I left it for you to talk about it, but you come up with some interesting topic anyway. I think you're looking at your top stocks on your watch list, which is nice. So we're going to have a hear about those little stocks that you probably want to be buying in the future. Before we go on, Equity Story general advice warning here that every stock we talk about is pretty much talking about the fundamentals and technicals only. So no personal advice whatsoever. Claude, obviously welcome again. I am just quickly what I'm going to do before we start on our thought of the week. Last night's US markets sort of settling down a little bit. There wasn't anything outrageous last night, which is nice. So possibly maybe a little bit more stability coming back for this week. So I'm just going to be watching that. I'm still not, rushing into the markets at all, but I'm just with interest in seeing how my little stocks go. But saying that, we've got today pretty interesting CPI figures coming out in Australia. So we're going to be watching that, of course, closely to see whether the inflation's coming off or not, and by how far. Hopefully it does, which means maybe a pause in interest rates for us next month, which is not that far away. All right, so I'm going to switch screens because I want to first of all talk about some announcements this morning. So if you just give me 1 sec, I am going to switch on to new share, which is our screen. Yep, that's it. So share that. And you should be able to see the screens here. So I'm going to go to the charts first, and I want to talk about LOQ. So ALQ, I've been doing actually not too bad recently. I mean, they sold part of the business, or one little business, to SRG, which I know you like, but ALQ has been quietly doing quite well. And today they've announced that there's a small little upgrade to the FY23 numbers, which is nice. And you can see, I suppose, there's a little bit of a movement in the share price. It is actually probably going sideways more than anything else. So it's not a trending stock for the technical, for the traders out there. Would you be holding it? Possibly not, because it's under trend lines. There's really no reason to be in this at this stage, because it does look like it's going sideways, but it's not a bad little business. Probably a little bit maybe too expensive right now. But that's one announcement. The other one I saw today was CTM, and that was actually quite good because they've got a nice little, well, not nice little, it's a nice big project in Brazil. And this is a nickel project. But results today, again, pretty impressive. Looks like a huge resource. Very nice nickel deposit. I reckon it'll be in the crosshairs of someone. Someone's going to take this out eventually if they can operate in Brazil. Brazil is notoriously not easy to start a mine up. So yeah, look, it's definitely one to put on your watch list if you like nickel, because it is one of the bigger deposits globally, and it's got a nice grade to it as well. So one to probably watch. The last one I've got in there is PLS, and they've basically said, we want to go and mine more lithium. So that's a big plus. And I'm actually going to be, this is my topic. I'm talking about lithium. So I'm going to look at PLS and some of the others in there. But it's a nice bounce on yesterday's takeover for LTR. And also today's, they've got a nice announcement saying that they're going to see if they can mine more lithium out of that Pilbara, the deposit they've got. All right, so that's the announcement today, Claude. Nothing to really get excited about. Nothing, nothing fantastic. You can go, I want to buy this. So let's switch straight to our thought of the week. I'm going to let you go first, and you tell me what sort of stocks you're looking for, and I'll put it on our charts, and we'll see how they're actually trending.
Yeah, cool. All right. Well, I just thought I'd come up with a few companies that are near the top of my watch list I'm eyeing off. First one to start with is Big River Industries, which I think I've heard you mention at some point in the past. BRI is that one. That's a manufacturing distributor of timber panels and building materials, basically. So a bit of a distribution network, obviously not necessarily the best kind of business, but also not the worst either. because as they grow, they can actually improve their quality. They have more of a network. They can deliver faster to more places. It's not necessarily like a recurring revenue business that is always going to go up. So it could have some ups and downs. But I think if you do zoom out as well to the longer term chart, it has been generally going in the right direction, and a bit of a roll up there as well, which again, sometimes makes sense with distributions companies because you know, they can gain scale. It does have debt, net debt of bit of over 20 million. So it's not insanely risky from that perspective, but it's not super safe either. Like, I would love to own these kind of companies that just had absolutely cleanest balance sheets, because it does have its ups and downs. Obviously, interest rates rising can affect the profits negatively. You could also argue that, like, in the current situation with the builder stimulus and everything that's been going on, they also did an acquisition that improved their scale as well. You could argue that, you know, it's just had a super good run with all the stimulus. I can't remember what it was called now, but it was it basically allowed people to do a 250k extension on their house or whatever it was. That really pumped demand. So you could argue that it's over earning, and I think that's the big risk, because suddenly, you know, it's not going to be so cheap if it reverts to the mean and earnings drop by 50% from here. But if earnings just drop by, say, 20%, you're probably not doing too badly, since it's on a PE of 9. And certainly, you know, I guess the results came in a little bit better than the market was expecting. And also, even though I do admit that it could have its ups and downs, I do think the general trajectory is going to be good for construction in Australia, just because, as we were saying before, we're letting in, it's in the newspapers. We already knew it from what little data we had. Even at the beginning of the year, they were forecasting a big year for immigration. I saw an article that was sort of saying, you know, definitely it is. So I think there's going to be a requirement that everyone's talking about how rents are going up. You know, certainly that's at my experience. Property prices are being hit by interest rate rises, meaning people can't pay as much. But at the same time, you know, you can find a tenant super easily. We didn't even advertise our investment property to find a tenant, and have it for years.
Very good. All right. So look, technically speaking, Claude, this is a good story. We actually like it. Me and Dave did look at this many times over, because it's a nice little story. And like you said, you know, it obviously fits in your analysis, fits in with what we've been talking about, that it's fairly inexpensive, not a bad industry, good dividends, trending well. So from all that point of view, we like it. And, you know, I agree with you. I think, you know, there's definitely possibly more growth for this company in the environment we're in. You know, we need definitely more housing. We need more growth here in Australia with the immigration coming in. So I think, you know, if they play the cards right, if they execute well, this could keep growing. And I love the fact that, you know, the recent management, when they took over, they really, you know, start pushing the company in a positive direction. Because they used to be like a family owned, you know, just chugging along pretty much. And finally they've got just bang, 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 start acquiring, start looking a bit more, you know, industry wide. What else can we do? How can we expand? All those sort of things. And they've been actually executing quite well. So you got to give them kudos for that. So expecting further upside here for sure.
Cool. All right. Well, then the next one I wanted to go on to is DTL, which is a company I used to own. I really like it. It's not. It's your little love
child, isn't it?
No, it's not like my favorite ever one, but I followed it for a long time. I think it's a good business. This is absolutely a distribution business, distribution in IT. Yeah, it's probably like the big risk here with DTL is it's just a bit too expensive at like 30 times earnings. So I think that's the big risk. But I do think that, you know, demand remains strong for these guys. They had really great last results because their margin went up because they had you know, a different mix, with a bit more of the managed services stuff. I think, you know, the cyber threat, the general like need for digitization and the digital revolution and stuff in government, etc. as well, it plays into the hands of these kind of businesses. So like it's far from, I'm not trying to say that it's definitely the best way to play the space, but I thought that you might like it because the chart, it looks good, and the fundamentals are good. It's definitely one that I would buy. Having said that, you might argue DDR with its terrible chart is actually better value, because this one's on like 28 times earnings and DDR's on about 20 times earnings. And I would generally argue that the quality of these businesses probably means that DTL deserves a slightly higher multiple, but that much higher, I'm not so sure.
Yeah, no, fair enough. I love it. And I love this little Reuters thing that I found recently, what gives you the earnings quality. So, on 90, that's pretty good for me. So they look at accruals, cash flows, and operating efficiency. So they've got some sort of formula they work out, and quality business, absolutely. So, 1, 2, it's trending well. It's just come back to the trend lines. Is it maybe time for a nibble for the long term? I know it's expensive, like you said, Claude, but quality companies, you got to always pay for them. Unfortunately, that's the trade-off. So yeah, look, I actually don't mind this at all. Maybe having a little nibble around these levels.
Yeah, I'd be tempted to recommend it and buy it myself, but I just don't know if there's enough of a, I don't know if it's the best opportunity right now. But I do like to populate these decent high quality stocks into my portfolio, and this one is, it's just, I feel like it's not the cheapest that I've seen it, put it that way. I've definitely seen it at better prices before.
I'd love to get it much cheaper. This is the thing, I'd love to get this maybe, I don't know, obviously in low 20s. Somewhere there.
Yeah, exactly. And I remember when it was like 13, 14. But I'm not expecting it'll ever get back to that. Now it has more spies, like in ASX 200, that kind of thing.
That's it. And that's the thing with companies, right? Once they get a track record, once they get bigger, there's more scrutiny on them. There's more investors looking at them, and generally speaking, nature expands the PEs ratios of these sort of companies, and then they become sort of market darlings, and they never go back to 13s or 14s again. And that's you gotta sort of readjust your way of thinking. What is a good opportunity here in some of these stocks, like a CSL, for example? Yeah, I don't think you'll ever get it below 20 ever again, but you've got to sort of think to yourself, where would be a good entry point? So I completely get what you're saying.
Yeah, I could literally find myself buying this. Like, it's just a question of, is it better off my money just sitting in cash like it is at the moment, or is it better off in DTL? Because I do think it's likely that over the long term, it probably will justify its current price. I think it just has a lot of potential for growth over the long term. But yeah, I could also see it dropping down to $5, and then, probably it would definitely do that if I bought it. So we'll see. The last one, which is a little turnaround stock that I've followed for a long time. I don't think it's particularly high quality, but it is on a little bit of a turnaround tear, potentially, is IFM. And I've owned this before just because, you could have argued that it's cheap if it turns around, or if it returns to like a reasonable margin and stuff like that, which is like far from guaranteed. It's been a bit of trouble business. It's really struggled to get sustained growth. But it has had takeovers offers, which then I think, nothing came of it in the end. But still, you could argue that suggests that there's some value. There was some director buying on market around the current price a little while ago. Not saying it was the biggest buy ever, but yeah, still something. And yeah, the basic story here is, I think it is in the most recent half year results, their profit bounced back, and they did 1.3 earnings per share. They generally expected to do, from memory, a stronger second half. So I'm just going to get up the analyst estimates for them. But yeah, essentially, you could, like, if it follows the normal pattern, let's say in 2023, some analysts have it up to 5 cents, call it 4.8 cents. The general trend, over this company has been to be disappointing. So that's why you could argue it's cheap, but it's still expected to get around 4 cents in earnings in FY 2023. And then at $1.50, it's just under $1.50. That puts you on, like, still a pretty high PE ratio. So that's why for me, it's too early. But supposedly it's early in the turnaround, right? So the general argument is that it continues to grow its earnings and they recover to historical levels. So FY 2024 analysts have it going up. The analyst consensus is just for like a smooth up, basically. So if the analysts are right, it gets there eventually. And it's a software stock on 20 times earnings or something like that. And whilst it's struggled to grow over the years, it has also showed that it's a hard to kill business. So it does have some of those qualities that you like. For me, probably the price isn't just quite there, but I was really eyeing it off at around $1.20 before. And I wouldn't be that surprised if it came back down to $1.20 again, because it's pretty a liquid trader. Yeah, the story's got a lot of holes in it, but if it actually does string together 2 years of good growth, 4 cents, 5 cents, 6 cents, or 4 cents, 6 cents, whatever, at the point at which its earnings per share is 6 cents and it's grown 50%, then, is it going to be on P25 then? Maybe, but if it definitely pulls another, if it does another year beyond that, then it'll get re-rated or it'll get taken over, in my opinion. So it's basically, the thesis is it can string together a couple of good years after it's had a rough couple of years. That's the thesis. And then I don't think the price is right there to give you the compensation for that risk, but I have a feeling that it could potentially happen, because this one's had a few renaissances over the years, like ups and downs over the long term.
Claude, you absolutely hit the nail on the head, right? When you said it needs to string together a couple of good years. I mean, look at what's been happening. So good announcement followed by bad announcement. Good announcement followed by bad announcement. Takeover offer. Then people just there's no takeover offer. Good announcement followed by is it? That's the question, right? So they need.
And the crazy thing is, this has been going on for so long now.
Yeah, I know they can't string like 2 good halves in a row. That they get everyone excited and then they disappoint with an announcement that isn't quite up to scratch.
If you look at the earnings before tax, excluding unusual items over the years, in 2012 it was 11, then it went 12, 15, 17, 12, 16, 15, 17, 25, and now 8 and now 10.
Yeah.
So it's like, it can be up. It has been up and down over the years. Probably you'd argue, it's in quite a severe down right now. So, it's kind of a reversion to the mean kind of thing. Even if they get 50% growth from here, I think it's pretty reasonable. But really, I'd say the thesis is get your 50% growth, then there's a bit of excitement about the stock, and then probably like sell, because it doesn't seem to be able to sustain it in the past.
But look, I love the thesis as a turnaround. It's actually trending above trend, which is a positive sign. So as long as they don't disappoint the market, it should stay up there. And if they actually surprise on the upside in, say, August or maybe beforehand with a little update, then you might see that retesting that 170 again around here. So look, it's interestingly poised right now to see where it's going to go next, because either they're going to report well and the market's going to go, yeah, okay, we're finally back, or they're going to disappoint again. And like you said, you could pick it up back at the $1.20.
Yeah, I think the best opportunity might be if they just like roughly report in line with analyst estimates.
Yep.
At which point they'll still look pretty expensive. But if there's commentary or any indication that the future estimates look like they could be accurate, if you're confident that the analyst estimates are accurate, then you could definitely buy it at the current price. I'm just not quite there yet. And, you might miss the opportunity. If they beat, then it might never come back. But if they just stay in line, it's still going to be a reasonably high PE ratio for what it is at the moment. So it won't start getting a re-rate until it has a bit of a run of good results. And then,
Yeah, no, it makes sense. Look, I like the company too. So I definitely have got it on my watch list. And I think we've been in and out previously trading this, and I had it in my portfolio. I don't have it obviously anymore, but yeah, definitely want to watch to see what actually happens, and hopefully they can deliver another piece of good news, and then we see the price rising up, and then it's time to pile in. All right, thanks very much for that, Claude. I appreciated those 3 companies to put on a watch list and possibly even have a nibble sometime in the future. I'm going to quickly go through my stuff. So my obviously thoughts turned yesterday to Lithium after that Abemali takeover for LTR. So I'm sort of trying to work out where to from here, right? For the lithium space and some lithium stocks. Is this a reboot? Is this just a one-off thing? So I've been sort of trawling through some data, and I've been working out what some of the other companies are worth maybe as well. So let me start off with showing you the lithium price, right? So let me go back and I'll go to commodities. So I'm going to share the screen with you so you can see what I'm looking at. And here we go. All right, so you should be able to see that. So I'm going to go to lithium and I'll show you where we're at the moment. So it's not great, right? So lithium is going down, 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 down. That's not good for the sentiment. But you've had that effect of Albemarle coming in, getting their market excited again, thinking that, you know, we've got back to the boom again, which I don't think so, right? I think what's going to happen is if there's going to be further action in this space, it's only going to be for the really top tier one assets in this space. And really, there's not many around. And I'll show you why in a second. But that's not great. So I'm thinking if you're going to be investing into lithium space, find yourself a really top quality company and you'll probably do okay. Because I think, you know, the price is moderating and it probably will eventually bottom out somewhere and probably around the 200,000. But, you know, at that 200,000, not many companies will actually make it. In fact, probably a handful of only probably will. And let's go through some of these companies. So let me get back down to this and I'll show you. So what I was looking at. So this is some of the companies that I've been looking through and trawling through. This is on Stockhead, come out with some lithium space companies. And really, when you go through them, and I'm going to concentrate on the hard rock lithium. I'm not going to talk about the brine stuff because it's a very different lithium, you know, the way it's produced and so on. So I'm just going to look at what has happened with LTR, and this is a hard rock. So first of all, Albemarle, I think, bid $2.50, or they're looking to bid $2.50 for it, which values LTR at about $5.6 billion. So when you extrapolate how much actual resource they've got, and this is a big resource, about 150 million tons at 1.4% lithium, Li. And that is a big resource, good grade, you know, and it's a good jurisdiction in Australia. So if you extrapolate those numbers, you're looking at roughly 36, I think, million bucks per ton of resource they've got. So if you're going to be applying that metric to whatever you're looking at, or whatever company you might have, use that 36, multiply it by, you know, whatever resource they got, and you're roughly going to work out where your company should be sitting at valuation wise. But that's going to probably only apply to really good quality type deposits like tier one. And unfortunately, like I said earlier, there is not much of them around. So what are the quality companies? So I've been looking through this list. So probably the 4 maybe that I've probably thought that they've got really something decent.
Oh, there are so many.
Yeah, look at them. I mean, there's just bucket loads, right? There's bucket loads, but a lot of them, Claude, have just really got nothing, or have got a very small resource, or very low grade, or they're still exploring, right? So really, there's probably you can dismiss, I'd say, 98% of this list here, unfortunately, at this stage, right? So the ones that stood out to me today when I was looking through the list. So it's LLL, which is this one here, Leo Lithium. So these guys got a resource of about 142 million tons. Unfortunately, it's in Africa, right? So that's the negative thing about it. But I got 142 million tons at about 1.4. So in effect, it is extremely similar to LTR. LTR's got 150 at 1.4. These guys got 142 at 1.4. So 5.6 billion bucks bid by Albemarle. And what's the market cap of Leo Lithium? It's only about 600 million bucks. So you can see there's possibly value in this. I take a big discount to Africa, right? So probably half.
Where's LTR's mine located?
In Australia, in WA.
Gotcha.
Yeah. So, you know, that's very, very good jurisdiction. If you're a company like Albemarle, you're probably going to be bid there first, right? Because
I still think Albemarle is a good play though.
Yeah, absolutely. You can obviously go, if you're going to be investing, you can go to the producers already, like AKE, PLS, and maybe a couple of others out there. But like I said, following from there on IGO, which has got the Greenbushes mine as well. But apart from there, Claude, there is really not too much. Like I said, LLO is one that stands out, but it's in Africa, so that's a big discount for me. I'll probably give them discount by 50%. So let's say, at most, I'd say $2 billion would be probably my sort of guesstimate of what I think it's worth on what we've seen yesterday on that bid, right? So that's still a decent upside to the price at the moment of LLL. And I put the screen back on here.
Yeah, maybe I wonder if, because I was looking at this a while ago as well. Obviously, hard to know if they'll ever be able to actually mine it though, because there's
and this is the thing. You got to discount it heavily, right? For me,
I think also there's a JV with Ganfeng Lithium Group, and I just feel like maybe they're gonna. Then maybe they like bribe the politicians, and then suddenly exactly. Suddenly their right to the mine is invalidated or whatever. And it all goes to China or whatever. Like, that's the thing that I worry about.
This is exactly what happened with AVZ, right? Where, they've lost their whole rights to their mine they had over there. So this is the risk, right, Claude? Absolutely. I mean, in a best case scenario, I reckon, like I said, $2 billion will probably be worth. At worst case scenario, probably nothing, because they might lose that some along the line. Right? But, I can understand the discount versus what they're paying in Australia, because Australia is pretty safe jurisdiction. So yeah, look, great. If they can get this going, if they can get all the permits and start mining it, it's definitely worth what it is at 500 million, right? So that's what I'm saying here. But it's, things have to go properly for them, and everything has to work out well. So that's one. I thought, probably if you're going to be playing a high risk game, there's one. If you're going to maybe playing a little bit lower risk game, then you're probably looking at something like an SYA, which is in America, right? North America. So pretty good jurisdiction, I'd say. Got about 119 million tons. So I'm looking at companies got over 100 million tons. 100 million tons for me is a big deposit, right, of lithium. When you see what Wesfarmers, they bought the Mount Holland at about 150 million tons. You've got this LTAs at 150 million tons. You've got this Gallimuna in Africa at 150 million tons. This has got about 120 million tons. All the other little players, Claude, they're probably less than 50, so probably 10, 15, 5, very small. It's not going to be attractive to a big player at all. So don't forget about you thinking you're going to get taken over. There might be one odd case here and there, maybe they merge together or something, but you're not going to get an Albemarle come in for your $15 million deposit. Trust me. So you got to have really top tier quality asset. You've got to have a high grade, huge, and a good jurisdiction, I'd say, for you to see some sort of action if you're going to be playing this space. Anyway, SYA is actually pretty good. It's in North America, like I said. It's looking decent. 119. The only thing is maybe going against it is lowish grade, about 1.05, I think. But what is the plus for them? They pretty close to probably where that lithium might be actually used and produced and made into batteries, right? With the car industry in America, it's quite huge. So possibly that's a big plus. Less costs involved. So potentially that's the trade-off with low grade, but possibly better maybe position where it's actually at. So one to maybe have a look at SYA. And like I said, from then on, it drops off significantly. I could not find anything else in there that even come close to it. I mean, if I'm going to be looking at the explorers, the only ones I think could have potentially get 100 million tons is these two in Canada, Claude, PMT, which have been coming out with some incredible results, right, recently. And I think they can possibly get to 150 million tons, or at least let's start with 100 million tons with what I've seen. And the other one was WR1, which have been coming up with some good results. Probably not as good as PMT, but still very, very, very good, and probably better than some of the other stuff we've seen in Australia. So that's the other two that I'd be probably looking at as possible winners over the long term. But then on, nothing. So I'm still looking at Wesfarmers, who've got this Mount Holland, who want to start it up, and they bought their 150 million tons about 3 years ago now, Claude. So they look like they bought an absolute cheap as chips. They paid for 150 million, about $1 billion, which you can see, right? these guys are paying $5 billion. So 5 times the price has gone up since about 3 years ago. There you go. So Wesfarmers has again played it just absolutely beautifully, timed it superbly.
So summarize it for us. More speculative one.
Okay, so look, for exploration wise, there's only two you'd go to WR1 or PMT.
Yep. And our best more advanced ones.
Most more advanced one, I'd be looking at SYA, I'd say, right? That would be my best one. Bit more risk, but advanced would be LLL, right, in Africa. Yeah. And then producers, I'd be looking at something like a PLS still. It's still got a huge resource in Australia, right? Great jurisdiction, of course, with 150 million tons. And they've just today announced they're going to up their production to 1 million tons. And I'd definitely be looking at Wesfarmers, right? That they're actually going to add quite significant potential to their already burgeoning, conglomerate that they've got. So I like that. And of course, you've got Mineral Resources with the Wodgina, and you've got IGO.
I like that Wesfarmers is a bit of a exposure. It's like, so you prefer Wesfarmers to Minre, is that right?
I do. And I tell you why Wesfarmers as well, because they're also going to be actually turning that turning the spodumene or lithium into actually products, right? So they're going to actually enhance it. So almost like the chain's going to keep going with them here in Australia, not just sell it out of the ground and sell it to the Chinese and let them make the money on it. So I love the fact that they've got this hydroxide plants in WA. And like I said, it's good. And the other thing with Wesfarmers, Claude, I'm not sure that you've been reading too close with Wesfarmers, but they've gone into that pet side, right? So they've started. I saw the ads coming through. They're putting the products into Bunnings with pet stuff. That's a huge industry. I reckon they've bloody hit the nail right on the head with that. So I just love the fact that they're playing it beautifully at the moment. So for me, Wesfarmers, and it's actually trending okay. Get $50 if you go up. So
EBOS has not EBOS. Wesfarmers also has like a health division, which is like competes with EBOS. They're not bad businesses. And yeah, so it's a bit of it's got a few things in it that I like it, and I think that this lithium is one as well now. So
yeah, and they're looking to add more. I think they spoke about that. They're possibly looking for more lithium to add to that, to feed that the plants that they're building in WA. So potentially, there could be more buying. Is someone going to come into and bid for LTR? Possibly. I think the city took today talking about that there might be another player coming in and maybe trying to make a bid for LTR. Is it going to be Wesfarmers? Maybe. You just don't know. But I think Wesfarmers will probably want more lithium somewhere along the line if they think that lithium is the place to be.
Yeah.
Anyway,
okay.
So
well, I like it anyway.
That's the summary of that. You've got some interesting stories. Like I said, forget about the others.
Not to mention Bunnings, of course.
Yeah, exactly.
Yeah, there's a lot to like about it. Like, I feel like maybe Wesfarmers is a good way to get some exposure to lithium. Obviously, it's not going to be the only thing that impacts returns, but yeah, conglomerate paying a bit of a divvy. Obviously, you need that divvy to grow though, but yeah, should do.
Yeah, I think so. I think it's just a very interesting story. And for me, it's got that growth now on the horizon with the pet into Bunny. I wonder how it's going to go. And of course, the lithium that's going to probably, I think next year they're talking about first lithium to be processed. Okay. Thank you very much, Claude, for joining me. You've got some very interesting thoughts from myself and from you, Claude. So thank you. And again, let's see the CPI numbers. Please be down. Please be down. And hopefully we'll have a nice finish at the end of the week. Cheers.
Cool.
See you tomorrow.
Thanks as always, Peter. Have a great day.
Thank you. Bye.